The corporate regulator warns that Australian businesses are very underprepared for cyber attacks. ANZ's $7.4 billion profit sends its share price lower, and why 30,000 containers are stranded around the country. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Tuesday, the 14th of November, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you are speaking today with Siobhan Casey, who is Head of Growth at ACS.
This is a really interesting chat. So ACS, which is what was known as the Australian Computer Society, they've upgraded the name to ACS, released its annual Digital Pulse report recently. And we all know there's a skills crisis, but this puts numbers on it. What's pretty incredible is what artificial intelligence is going to do in terms of skills. In fact, the figure is almost 95% of jobs are going to need new skills because of AI. Fascinating.
Sean, the main story this morning is still in the digital kind of space, really, isn't it? Corporate Australia is not cyber prepared, with around half of companies not managing third-party or supply chain risks that are commonly used by hackers to breach companies.
Yes, and after the release of the Australian Securities and Investments Commission annual snapshot of cyber preparedness, Chairman Joe Longo warned that businesses must close alarming gaps in their cyber security defences. In its report, ASIC rates Australian companies on their cyber maturity on a scale of 1 to 4. 4 is ideal. It gave a weighted average across corporate Australia of just 1.66, meaning that most companies are reacting to problems as they arise rather than properly mitigating them. Small companies were markedly worse than larger ones. Now, the report found 44% of organisations fail to manage the cyber risks posed by dealing with external third parties such as vendors, suppliers, partners, contractors, or service providers. They often have access to internal systems of companies, and of course, that's where you can be hacked, according to the report. It said 58% of companies have limited or no ability to secure confidential information. And a third of companies have no cyber incident response plan, according to a report in the Financial Review. Mr. Longo said it's alarming that third-party relationships provide threat actors with easy access to an organisation's systems and networks. It's very scary reading, Michael.
Yeah, it certainly is. And Sean, we've seen plenty of data breaches recently, including port operator DP World in recent days. And then you have Optus, of course, have had a network outage last week and a major cyber breach last year. It's a responsibility of businesses, but what about government?
Yeah, so business is certainly asking for some help from government. Now, the federal government is expected to announce a long-awaited national cyber security strategy next week. Details have begun to emerge about new requirements for companies to warn the government about unfolding cyber incidents and ransom demands, in addition to adding telecommunications providers to tougher security of critical infrastructure laws. That's all okay, but there's already fear out there that some of the changes will be very costly, particularly for the telcos if they have to follow those security of critical infrastructure laws. They'll also be really difficult to roll out and really difficult to manage. So a long way to go on that one. The government hopefully will release that cybersecurity strategy next week, and we can go from there.
And just quickly on Optus as well, Sean, the telco has announced the cause of last week's outage.
Yeah, so apparently Optus's network crashed because its routers received incorrect settings from overseas as part of a software upgrade, causing a cascading failure. Now, the reason only parts came online, or different parts came online at different times, was that they needed to physically go to these areas to fix things. Not sure I'm much the wiser after hearing that, but I'm sure some tech guru out there can perhaps put it into English for us, Michael.
I suspect so. It was pretty disastrous overall. Now, how did local markets perform yesterday?
The S&P ASX 200 closed down about 0.5% to 6,949 points. The energy stocks led the way lower, while the real estate investment trusts, financials and consumer discretionary stocks also underperformed. Of the 11 sub-indices, only utilities was higher. Now, having said that, Michael, not much happened. You know, when you're looking at a market report, you do it every day and you look at it and you think, not a lot going on here. How are you going to get excited about this one? Well, that's what I'm trying to do. Stay with me.
You always find a way to get excited, Sean. You can make anything sound exciting. Please invigorate me.
Oh, look, you just looked at the sectors. There's no big swings there. Not really a lot going on. I mean, ANZ was off 3%. We'll talk about that in a moment. Macquarie's down 2.6. NAB was off a bit. Some of the tech stocks like REA and Xero were off, and Goodman Group did okay. But even those ones, they just weren't very much. So I'm looking at it thinking, oh, how do I turn this into something interesting? Make fun of it. Maybe that's what I've just done.
I think you did, actually. When all else fails, just poke fun at the market.
Yeah, plenty of corporate news ahead of us in this show. Just a couple that I just want to mention briefly. Metcash will take full control of the Total Tools business, very aptly named Total Tools business, buying 15% of the hardware chain it doesn't already own for just over $100 million. And shares in gaming group Ainsworth Game Technology jumped 13% after it confirmed media reports that it had hired Macquarie Capital to review its strategic options. Now, earlier, the Financial Review had reported the group was considering going private. Ainsworth Game Technology is Len Ainsworth, who, of course, was the original founder of Aristocrat Leisure, which is one of the biggest companies in the country now.
All right, now after mocking local markets, Sean, what's happening on international markets?
Not much, really, to be honest. When oil was down a bit, can I say that? Gold's down a bit. Actually, oil's off about 15% since its peak. It peaked in about mid to late September from memory. It's down about 15% since then, so that's sort of trending lower. You know, the Aussie dollar's really exciting, Michael. It's up from about 63.2 cents to 63.6 US cents.
Oh, better sit down. Goodness me.
Actually, Bitcoin's holding on to recent gains. It's running at 37,000 US dollars a unit. That's kind of exciting.
What's happened there? Because this was one of those things that when you go away for a little while and you pay a bit of attention to everything that's happening in the business space, but I wasn't really looking at Bitcoin. I come back and it's just surged. What's happened?
Oh, I'm so pleased you asked, because Adam and I had this exact discussion and we basically fumbled around and said, don't know. And a listener came in and said, well, you buffoons. Well, that's not true. He was far more generous than that. Just wanted to help out. Maybe the fact that crypto may well end up within ETFs, and BlackRock's talking about an ETF. They're waiting on US regulatory approval for that. That probably gives it a lot of credibility. That's probably helping out. So that's actually the answer. The other thing as well is that within cryptocurrencies, there's security in Bitcoin versus a bunch of the others, simply because it's the biggest one. So if you want to be in cryptos, Bitcoin is certainly popular. If Bitcoin is added to a managed fund ETF, for example, from BlackRock, that certainly gives it a lot of credibility. So that's kind of why it's jumped as much as it has.
All right. Well, you got excited about that, didn't you?
I did. But that was a listener that came in and helped us there.
Oh, well, thank you very much to that listener. Well, you know what we should do, Sean? We need to bring back, we haven't had a Mia, a most enthusiastic advocate, for a very long time.
That's true.
And they're always very popular whenever we had our Mias. It's a thing to be proud of. If you are awarded the Mia, the most enthusiastic advocate, as in the person that's kind of telling people about fear and greed and getting out there and talking about us on social media, on LinkedIn or Instagram or wherever, or just even telling your colleagues, and then you were announced on air as the Mia, then that was something that you could really just take home to show the family. Well, I mean, you've got nothing to show them. You just have to play the podcast. Yeah,
absolutely. And I think let's introduce it. I mean, it still comes up. People are still asking about Mias, and so why not? In fact, Sherelle Murphy, the EY chief economist, who was our guest judge on the weekend show, she, maybe a couple of months ago, basically pleaded to be a Mia. We did better than that. We made her a guest judge on the weekend show.
That's our highest honour, isn't it?
It is. It's absolutely. But Sherelle is a great supporter of ours. So, in fact, let's just say Sherelle's our most... What is it? Mia.
Most enthusiastic
advocate. Yeah. It's a great acronym.
It's not a catchy acronym, is it? You know, it's a pretty bad acronym when even one of the people who's been talking about it now for months and months and months, i.e. you, doesn't know what it stands for. So anyway, we're sticking with it. Mia, most enthusiastic advocate. Congratulations, Sherelle Murphy. We'll be back in a moment with the rest of the day's business news. Sean, ANZ's aggressive activity in the home mortgage market has helped propel the bank's full-year profit to $7.4 billion, but the result wasn't universally applauded.
No, so the figure was up 14%, but it was just a touch below analyst expectations, and ANZ's share price fell 3% yesterday. The result was notable for its push into institutional banking, doing business with large companies, and its competitiveness in the mortgage market. Now, ANZ added $11 billion in net new home loans in the 6 months to September 30, but the retail bank's net interest margin, basically the difference between what it lends and borrows at, fell from 2.39% in the first half to 2.06%. Now, across the group, went from 1.75% to 1.65%. What's been interesting, the other banks have been complaining about one competitor basically being too cheap, being too competitive. Now, none of them have actually named ANZ, but this result shows that ANZ has been very, very competitive in this market. Essentially, it's just doing better deals than the other major banks. That's hurt profit margins. Good for home buyers, of course, not so much for shareholders, at least in the short term. Chief Executive Shane Elliott came out and said credit losses were likely to rise in the next year given the higher interest rate environment. He also defended the aggressive competition in the mortgage market, and he said, well, we're helping customers. We're not going to apologise for that.
And now, Sean, the Reserve Bank's acting chief economist, Marion Kohler, says Australia is in for a bumpy ride as it tries to reduce inflation, which, of course, is a precursor to lower interest rates.
In fact, lower inflation is a precursor to stable rates. So if inflation keeps rising, I suppose we're actually going to keep getting interest rate rises. Anyway, Dr. Kohler said the next stage of bringing down inflation is likely to be more drawn out than the first, with services inflation and petrol price shocks adding to cost pressures. While inflation has come down from 8.4% late last year to about 5.5% in the September quarter, the bank still wants it inside its 2 to 3% target range. Dr. Kohler said the experience of other economies was that bringing inflation down further was much, much tougher. One piece of good news is that the very tight labour market has begun to ease.
Now, I mentioned this one a little bit earlier, Sean. There's about 30,000 containers that have been left stranded in ports around the country as a result of operator DP World being cyber hacked.
Yeah, that's a lot of freight, don't you reckon? 30,000 containers.
Yes, considering how much is in each container. Think about all the pallets within that, because I know you're obsessed with pallets and you're obsessed with
a good pallet.
Brambles and the pallets that they have.
Yes, totally. And the lost pallets, yep. Yeah, so basically DP World restarted operations yesterday after closing down on Friday. It expected to move about 5,000 containers out of its Sydney, Melbourne, Brisbane and Fremantle terminals yesterday. Even that number seems amazing, that you can move 5,000 containers in a day out of 4 ports. So let's say the busiest one might be Sydney. That's like 1,500 containers to 2,000 containers in a day.
That's a lot.
Maybe it's just that the markets were so boring yesterday that I got very excited about container movements.
You
Maybe
get
that's what
excited about odd things, though. As I said, pallets, containers. I'm just making a list of odd things that excite Sean Aylmer.
Anyway, the company said that they do still expect some disruptions. Ongoing investigations are underway. They'll take some time. It hinted that normal services won't resume just yet. The group, DP World, manages 40% of goods coming in and out of the country.
That's huge.
Yeah. And if it's already running behind, though, because it's in the midst of some industrial action, the Maritime Union of Australia is upset about the conditions being offered under a new award. Yesterday, the union came out and said that the cyber attack won't mean that they're letting up action with industrial action, because they want a new agreement this week. But yeah, 40% of goods coming in and out of the country through DP World. Amazing.
Amazing. It is massive. Now, the federal government's independent infrastructure advisor has warned that there isn't the financing or the workers to deliver the nation's largest projects, warning states to narrow priorities or face delays and cost rises.
I know I'm digressing a bit today, but wouldn't you like to be the federal government's independent infrastructure advisor? The IIA.
Look, honestly, no. I don't think I would.
No.
Can you just imagine the priorities after every election?
Oh, gosh.
It would all change. You would have 3 years to kind of assess all of these things, and then a new government would come in, and infrastructure is obviously such a major part of any election, particularly because that's kind of where a lot of money is funneled and a lot of kind of
tens of billions of dollars.
Yeah, and a lot of votes are kind of persuaded through infrastructure promises. Yeah. And so the job for an agency like Infrastructure Australia changes dramatically after any government changes. Anyway.
Well, but They do have a new chief executive. He came in July, a guy called Adam Kopp, who seems like a nice fellow. Don't know him, but, I saw him yesterday, and he does seem like a nice fellow. He basically said the Albanese government's looming cuts to billions of dollars in projects, some of which he questioned the value and quality of, are necessary because it's just not possible to deliver at the current level of work planned over the next decade. He told the Financial Review Infrastructure Summit that it was okay when interest rates were basically 0% and there are plenty of workers around to have all these projects on the go. That's no longer the case. Mr. Kopp said, while a large amount of infrastructure is needed to meet the demands of a growing country, it actually needs to be better planned. Fair enough.
Australian Super has rejected a last-minute offer to join Brookfield and EIG in their $20 billion takeover of the energy group, ensuring a few more nervous nights for the buyers ahead of next week's shareholder vote.
Yeah, so of course AusSuper is the largest shareholder in Origin, about 15%. The consortium wrote to AusSuper yesterday and suggested that AusSuper joins them as buyers of Origin in an effort to overcome the fund's opposition to the takeover. Now, AusSuper said it will vote against the takeover scheme still because it believes the ongoing energy transition has further enhanced the value of strategic energy transition platforms such as Origin. The bid requires 75% approval from voting Origin shareholders, a threshold that's a bit difficult to achieve because not all shareholders vote, number one, and they've got 15%. They've got to get 75 out of 85 already because 15% is voting against it.
Agribusiness Elders share price jumped more than 18% yesterday, Sean, after the group outlined a 38% drop in net profit, but was very upbeat about the future.
Yes, now a little context needed here. Last year's result was Elders' best ever, and the 12 months to September this year was the second best ever. Net profit was $101 million. It was lower than last year on the back of falling livestock, farm chemicals and fertiliser prices. Chief Executive Mark Allison, who's led the group for a decade, he was actually supposed to leave about now, but they couldn't find someone to replace him or someone that they thought was suitable, so he's decided to stay on. Yesterday, he said Elders was not a one-trick pony, which I like that as a description for an agribusiness, not a one-trick pony. He said the company would continue to deliver 5 to 10% earnings growth through the agricultural cycle. Elders has 16 potential buyouts in the pipeline. That's a lot of M&A. In fact, it's already done 9 acquisitions in the past 12 months.
TPG Telecom's share price tumbled 12% yesterday after it failed to reach an agreement with Vocus over a transaction to offload its Vision network.
Yeah, more M&A from yesterday. Discussions on the $6.3 billion sale of the fibre assets have gone on well beyond the exclusive due diligence period. Yesterday, TPG put out a statement. It said the proposed transaction involved considerable complexity and ultimately the parties have been unable to reach alignment on the operating model and commercial terms for TPG to have sufficient confidence that a successful transaction can be agreed and executed. However, there's plenty of discussion that the Macquarie infrastructure-backed Vocus Group will be back for another crack. Now, Vocus wants the 27,000 kilometres of fibre to boost its broadband services. TPG wants the money to pay down some of its debt. Mostly these things come down to price, funnily enough. So I just wouldn't close off on that deal just yet.
And one more, Sean. Intertech Pivot says a buyer has completed due diligence on its fertiliser business, hinting that a sale of the business is close.
I reckon we've been talking about Intertech Pivot splitting its fertiliser and explosives business forever. Maybe not forever, but a long time.
A very long time,
now,
yes.
Neither of them are doing particularly well. The group's net profit for the 12 months to the end of September fell 57% on the back of lower revenue. We found that out yesterday. Pre-tax earnings at the explosives business was down 16%, and the fertiliser business, it was off 75%. After the result yesterday and the announcement of the potential buyer of the fertiliser business, analysts came out quickly and said they're worried that the fertiliser business is being sold off at a low point in the economic cycle. Incitec's share price ended up more than 1% yesterday.
It's funny, you would expect the fertiliser business to be a high growth division, wouldn't you?
Oh, God.
That felt a little bit lazy, didn't it?
It was a bit lazy. I mean, I wouldn't mind like a blow-up style.
Yeah, I was thinking about
reference.
something to do with kind of separating the two. How would you do it? Blast,
Yeah.
all that kind of stuff. And just couldn't quite land on it in time. So I'm like, oh God, he's finishing here. Oh, okay, come up with something. And I settled on fertilizer and high growth.
Good.
I regret nothing. I'm sticking with it. International news time now, Sean. And the US conducted airstrikes in eastern Syria on targets linked to Iran, according to Defense Secretary Lloyd Austin, while President Joe Biden spoke with Qatar's ruler about trying to secure the release of hostages in the Gaza Strip.
Meanwhile, Israel's military pressed on with its offensive against Hamas, engaging in ground battles in a district in northern Gaza that also contains the third largest refugee camp in the enclave. Israel says it killed militants in the area, which is in a zone it has told civilians to leave.
Sean, 2 Indian cities have joined New Delhi to be among the world's worst 10 for pollution yesterday, with smoke heavy in the air, a day after revelers let loose with firecrackers for Diwali, the annual Hindu festival of light.
Don't you love the fact that Diwali is such a big occasion that it actually causes massive smoke haze? And firecrackers are actually illegal in India.
Are they?
Yes. So every year authorities impose bans on firecrackers, but they don't ever really enforce it. And so suddenly you get this incredible air quality issue. So the capital, New Delhi, took, as it often does, the top spot, most polluted city in the world. It had an air quality index figure of 420, putting it in the hazardous category, according to the Swiss group IQ Air. But it was also joined in the top 10 by Kolkata in India's east, which came in 4th, and the financial capital of Mumbai was 8th. A thick layer of smog had begun to circulate in New Delhi from Sunday night, sending its reading to an alarming 680. Now, every year, authorities try and ban those firecrackers. Never works. As a result, air quality deteriorates. Part of the reason also is that air quality in India worsens every year ahead of winter when cold air traps pollutants from vehicles, industry, dust, agriculture, that type of thing. Then you have Diwali. You end up with some very, very polluted cities.
All right. Okay. Up next is the Fear and Greed Daily interview. We're speaking today with Siobhan Casey, Head of Growth at ACS.
Yep, all about the skills shortages, but particularly what artificial intelligence and the growth in AI will do to skills and the need for pretty much all of us to reskill.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you very much, Michael.
It is Tuesday, the 14th of November, 2023. Make sure you're following the podcast and please join us online as well on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.